Hi, everybody. How you doing?
Morning, Dale. Hi, Dale.
Hey, how are you, Brian?
All good,
Brian,
mate. You?
good. I want to congratulate you on, the call from Monday on Evergrande that it wasn't systemic and there was a trade to the long side of stock indexes. Good, great call.
Thanks, mate.
Richard Adams, hello. Michael Schneider, Hugo, Alexander, Jays, how are you? Daniel, how are you? And there's Ryan. We already talked, so I don't have to say hello again to Ryan. Hi, Ryan.
Hi, Dale.
Monica, everybody okay? I hope everyone did okay on the Fed yesterday. I have a few comments to make about it. So let's take a look. And we could start off with the S&Ps. And, to me, this still looks corrective, like some type of ABC to the 50% level. NASDAQ has surpassed it by a bit, but coming off, it got a little bit above 50%. I don't know, could be forming a flag. Is it going to grind all the way to new highs? I don't think so. In fact, let's put my RSI theory to the test, okay? I'm doing okay, Sinatra. See this low right here and this confirm low? Okay, so it's my bet that this isn't the low. And I'm not sure if it's right to sell it right here or wait for 61.8. You could put on a piece and then another piece here. And also Blake made a great call with a harmonic yesterday. I think it was a Gartley and it could go up to 44.50. But right now we're stalling right here at the 50% level. So it's still my bet that this is not the low. I just use RSI, Daniel. Okay, Sensi said it's a Gartley for me. So is that up at 44.50, Sensi? Anyway, something else that, okay. So I was talking about fading the dollar after the Fed, which was pretty wild. The reason I thought that we'd make a new high was, again, my RSI work said that we needed one more high. And we diverged even after this spike up here. So I caught it at 49, already taken 30. I also went with the Aussie, and the reason I went with the Aussie is it never made a new low, okay, compared to the Euro made a new low, right? Cable made a new low, but this divergence was really tempting right here. The yen is in a world of its own. Only Ryan understands it. What whippy action we have here in Canada. I think we're going to 23. And this may just be the beginning of the Aussie. Why can't we rally, say, all the way back to 76? If we have equality here, we could rally up to 76, higher low, pretty much held the 61.8, won the stronger currencies on this dollar rally and foreign currency decline. Okay, so that was, the dollar call. And the dollar, just getting back to it, it's a pretty ugly day, failing rally. And a lot of people said that, we have 80 on the DSI and the Dixie. And I think that we could pull all the way back down towards the 91 level. And that should be positive for commodities. And, remember I said the big test for stocks is going to be if we have a weak dollar and if it doesn't buoy equities, there's a problem. Okay. So also take a look at gold. Gold sold off with the dollar. This could have been it for the pullback. I said I was looking to buy a pullback in gold. I didn't act on it. I'm really the type of trader that if I have more than 2 or 3 separate positions on, I lose focus. I don't know about you guys. All right. What's a submarine device? Oh, you're talking about the deal? Okay,
Yeah.
all right. Yeah, all right. Anyway, I'd like to see maybe ABC down here in the 1750 range, but it's same with the metals. You would think that with the weak dollar that it's right to buy dips in gold. I think that's about it. 10-year is trying again to the upside with the yen. And, if the yen keeps going, I should be able to, get this buy down here in the mid 1750 range. Silver, maybe silver puts in a higher low too. But anyway, S&Ps are fading quite a bit. And it's still my contention. This is my biggest bet, that this is just a bear market rally, just a retracement, and not that strong considering. So go ahead. Is that you,
I
Ryan?
just want to say good morning. It's Blake, and is my microphone working?
Yeah, you sound great. Loud and clear.
Well, you wouldn't get a response if your microphone wasn't working.
I was about to say no.
Good point. Hello, is this
Blake,
thing on? No, I
like,
actually just had to sneeze there for a second. It's allergy
that's like
season
me,
over
Blake,
here.
when someone says I don't have any volume, and then I talk to them and tell them to go back out and come back in.
I know, I used to do that, and then I'm like, oh, I'd actually I grab a Post-it note and then write it. So everybody else that's actually has their volume on, they can hear. It's anyway. All right, guys, I'll let you continue on. I just want to make sure my microphone was working.
You're good. Okay, I want to ask Stel and Ryan and Steve if you're there. Was it just unwinding of euro pound that lit up the pound? I mean,
it was the Bank of England today. So this was the main event this morning, and they're obviously not going to hike rates now, but they voted 7-2 to keep their bond buying unchanged. So we have now. We used to have Saunders last time. It was 8. Was it 8-1? I can't remember. But anyway,
7-1.
It's 10-1, whatever it was. 7-1. Yeah, sorry, because there was 8 of them. Now we have Ramsden, who also wants to reduce from 875 billion, I think, to 840. But the main thing is that they said that, and I quote, some developments strengthen the case for modest tightening. You know what the Bank of England's like. They're going to go slow. But still, markets pricing in now a decent chance of them taking the base rate to 0.25. Remember, it's 0.1 right now. So a decent rate, almost 100% chance of taking it there by February, which is the... was it February or November? Actually, I need to check. November, which is the inflation report. But so, a little bit hawkish from the Bank of England, nothing massive. They did say inflation is going to be slightly above 4% this year. So they have been wrong about inflation for a while now, and they keep adjusting higher, just like pretty much every other central bank. So that's moved the pound today a little bit, not massively, but a little bit.
Okay. All right. And Ryan, your thoughts on this? On the BOE.
Yeah, I don't think they were overly hawkish. They're just mooching around the prior language. I think the pound today was already on the rise, as was the euro, as yen pairs are. I think we just got over the risk and it's cracked on. We've said about the QE thing. It makes no difference if they cut QE now or cut it by 35 billion or whatever. It runs out in December, so it's small fry stuff. A taper isn't a taper at the BOE.
Yeah,
it's ending in December either way. Generally, I mean, I'm a bit surprised overall at the moves, especially in the dollar, because power was pretty hawkish yesterday, and that's a bit of a surprise. Now, on the taper side of things, you could say it was hawkish because we're looking at a 6-month taper, roughly 20 billion a month, might be on the hawkish side. But we've been waiting this taper announcement for months, and every FOMC we've had a moan up after. When's it going to come? So it's pretty. Yeah. The market's now got its taper at last. It knows the details, and it was bored with talking about it beforehand. But on the rate side, there was some expectation of seeing rates coming a bit closer. The market got that also, and I have been a bit surprised that the dollar, or at least yields, haven't kicked on, which is a worry if you're long something like dollar yen, like I am for the long term, because I
They
would
look
be
like the
hoping that,
same charts, Ryan, don't they? The 10-year
yeah, very
sideways
much
range and
sideways. And as we were saying yesterday, you take the news and you judge it against the price moves and your levels, and we've not really come close to breaking anything. We're, as you say, nudging up against 110 here. If we get above there, we'll probably grind and find resistance every 10, 15, 20 pips, maybe up to 111. But who knows? We're, as you say, great trade on the Aussie dollar, picking that one yesterday. We highlighted the 72.20 area early in the week,
yes.
as being a possible level, and it's held solidly 3 times. I suspect, I haven't heard yet, but I suspect there's barriers at 72, and we're going to hear about those all the way down to 70. So it could be a reason why it's looking so solid at the moment, because we're just seeing some of that protection in place.
Okay. And euro pound?
Euro pound
really took a hit.
Yeah, it's getting into that sticky 50-30 zone that has been the bane of my positions for months, getting through that blooming zone. So yeah, here we are again into that. Euro dollar as well. I think I've just mentioned it in the chat room. I think we could be in the gravity of some big options. We got over 4 billion rolling off at 1700, a couple of billion, I think 2030 or 4050. And that's one thing I'm looking for, that if the pound keeps ticking higher, or if cable keeps ticking higher, if Aussie dollar keeps ticking higher, if these yen pairs keep ticking higher, and euro dollar seems to be lagging, I think it could be these options. And once they roll off, we could see a bit of a catch up, which will mean if it sort of jumps up, maybe up towards 1750, even towards 1800.
Okay. So Blake, you ready to go?
I am. Good morning, guys. How you doing?
Good, man.
I am. I was just kind of dealing with microphone issues, but we were just kind of actually discussing on another channel. We have an interview that I did yesterday with Chris Weston, and it's nice to talk to Chris in Australia. Did you know they had an earthquake?
No.
In Australia? That's like end of days type of stuff. I don't know if you guys are in Australia.
Big one?
Huh?
Big. What was the magnitude?
It was like 6 on the Richter scale, but it's big enough to where, like, I mean, he said his walls were moving and all sorts of things. But anyway, I was talking to him yesterday about the whole Evergrande situation, and he was really looking for, he was like, and I don't want to give away the interview, obviously, but one thing that I will tell you guys, something that we've been looking at, is this US dollar CNH. And he's like, this is like really one of the things that you got to pay really close attention to, because there's a lot of headlines. Like, K-Man in the chat room just said, like, Evergrande's auto unit didn't pay any of its employees just like a minute ago in the chat room. If you guys hadn't seen that, here, let me just show you. Here's like, Evergrande electric vehicle unit has stopped paying its staff and suppliers at factories. That just, he just posted that in our chat room. And I'm like, man, that's obviously worrisome. It's people start, when you Dale, you said a little bit earlier, talking about like systemic risk and, what that actually means. And, a lot of people are not thinking about some of the ripples that it might cause. So, one of the places to really keep an eye on is this US dollar CNH. And I know we've focused on it recently. And here's the daily chart. And, I think a move above this, we were talking about it yesterday with Chris Weston, move above 650, really above 652. And you got to start being really kind of more concerned that China's playing a bigger role in the Evergrande situation, where they have to take, measures to weaken their currency. to kind of blunt this whole situation. But anyway, I was thinking about that as that headline came out, and conversations were going around in the chat rooms. But also, I have to mention, man, there's a lot of central bank activity last night. I mean, Ryan and Stelios, you guys were around. There's like central bank. There was we had this Swiss National Bank, Norges Bank, Bank of England. We have the South African Reserve Bank today.
The Turkish, yeah.
No, that's just for turkeys. No, really. I mean, I didn't even know that Turkey had a rate decision.
They actually cut surprise
They
cut.
actually,
And
yeah,
the
they actually
lira
cut rates because the lira is so strong.
The lira is at all-time lows
Yeah.
now, basically. And Norges
cut
Bank
rates
was
to combat inflation.
yeah, exactly. And Norges Bank was the first kind of major central bank to hike now, and they hike 25 basis points as expected from the all-time lows of 0%. And they actually indicated that they're probably going to be hiking in December again. So the krona is doing well, and Bank of Japan did nothing. Bank of England we talked about. So yeah, it was pretty active. It's pretty active.
Yeah, really, really active in the central bankosphere, if you will.
Yeah.
And I'm kind of focusing on the Rand today because we do have in less than an hour their meeting, and we just actually pushed through some support. This is like overnight support. I played this one on the long side yesterday. This is what was my big trade after yesterday's FOMC. I bought this at 14.69 and I sold it at 84. And that was a really, really big, it was like a % move. But it's dropped since then, and we just hit the 38% retracement. So I'm keeping a really close eye on it because I'm thinking, man, maybe this is a little false breakdown, but I might be a little premature. I'm just going to make sure it stays above the 38% retracement. I do think that overall it's acting pretty well, but again, you have central banks that are moving today, and that's really the key. So one of the charts I wanted to bring to you guys' attention that I talked about yesterday with the ForexAnalytix folks, and something that I'm really paying attention to is the S&P, and I'm looking for a Gartley reversal setting up at the possibly 4450 level is what I was thinking yesterday. However, today we reached for the 50% retracement of the high to the low, and we, obviously,
would that be enough, Blake?
Yeah, it could be. That's the trick today. Is I'm looking at it thinking maybe that was it. Maybe Europe took it to where it needed to go, and that was it. This 44.37, I think, is the high in the CFD that you can see here. But we are heading into North American.
Does it have to go to D for it to be a valid Gartley, or could it fall short?
No, it could be at the 50% as retracement as well as through the 127% extension to the 161% extension. So anywhere between here to here is fine. The thing is like I said, we are going into the North American trading session, and you guys know Americans like to buy stuff. Stocks would be one of them. So, not only do we like iPhones, we like S&P
Twitter,
index
they
funds.
call them stonks. STO.
Yeah, they buy stonks. Yeah, exactly. So anyway, but one of the things I want to point out here is if you go to the daily chart, and actually let me just grab a different chart so you guys can see it much cleaner. We came out of this wedge, and so for me, I'm selling into strength now. So I like rallies, and as I told everybody yesterday, I was looking for a move back up to the 44.30 to 44.50 range, and now getting up this morning and seeing where we're at, I'd like to see if we can stretch a little bit further to 44.50. And should we get up there, I'm going to be looking for some, trades to really step into for, a reversal of risk, for a move lower in risk. And, one of the catalysts could be, call it Evergrande, you start getting close to the weekend. And I don't know about you, the risk reward, I don't think favors longs right now. And with what's happening in Evergrande, it's got to have some institutional traders concerned. They might not say, "Hey, we're going to, the whole, situation is going to blow up tomorrow or over the weekend." But could things percolate a little bit and cause some gaps over the weekend? It's possible. So you might see some risk coming off as we approach the weekend. That's just an opinion. Not saying that opinion is going to take hold. It's just something that you have to think about from a psychological standpoint. We've seen a pretty big move the last week, and we've had a nice decent recovery, probably enough to where you're going to get traders saying, all right, hey, I'm really happy that we got back to where we're at. And, I need to take some risk off the table here. And, especially over the weekend, as we approach the weekend. So anyway, just
Blake,
some
one thing I wanted to say about Evergrande, people are asking and saying, look, there's not that much exposure outside of China. And they're right. A number I've read today, I'm not sure if it's 100% accurate, but if it is, it's scary. Evergrande apparently has 300 billion of debt, and the interest payment they are trying to make is 58 million. Just think about that for a bit.
Wow. I mean, that's like, I have a credit card debt of $10,000 and I can't make a $42 payment.
Yeah.
Yep.
So wherever it is, wherever this is in the globe, whoever it's affecting, I mean, it's not going to leave everything else untouched. So just something to think about.
Yeah, I agree, Still. As I've just answered to Ingmar in the comments. I was reading a bit this morning at HSBC. They're obviously Hong Kong. They've got perhaps a bit of exposure, wider exposure to the sector. So it's things like that we're going to be looking at. But you're not going to be seeing, we know what the big boys have got. They're sort of limited in their exposure, your JP Morgans and whatnots. But your more localized Western banks, if you like, that's where it's probably going to be seeing the problems. But still, I feel it's all going to be domestically based.
Well, it is. I don't want to take away from the interview with Chris Weston. So I'm not going to. You guys are going to have to watch it. It should be out here very shortly, actually. And it's interesting. He makes a couple of really great points regarding Evergrande and China and what's happening there domestically. So, and remember, he is in Australia, so he's got a little bit closer. He's got a little bit more boots on the ground, if you will, because of all of his contacts in Asia. So I found it really interesting. Anyway, but I do think it still needs to be on the radar. I don't think we should be taking it off the radar and thinking everything is fine. Sorry, I was just got my attention.
Yeah, definitely. I mean, we saw this morning, we got a couple of headlines out and we saw, yen pairs dropping. We saw Aussie dollar dropping back, 20, 30 pips. It's very much in the market's eye.
Right. And a couple things in currencies that, in my opinion, if you're looking at currencies, a couple of things that you should be really focused on is the dollar MEX. And this is just, and by the way, JP Morgan put out a note yesterday saying that they expect that the Mexican peso will actually weaken against the dollar. They had been looking at, all these positive developments in Mexico, blah, blah, blah. They just say from a macro standpoint, the dollar Mexican peso should now start to strengthen. But the one thing that I wanted to bring up regarding this pair, I think it's a great barometer for risk. I know a lot of us here, and even Dale started looking at it more. The thing is it hasn't broken down, and I know I've made this case many times on this webinar. It hasn't broken down as stocks have been at all-time highs, but you can see it looks very much like a VIX chart. Like
it does.
You look at VIX, right, and you look at dollar MEX, very similar chart. which is interesting. You wouldn't expect that
Yes.
with emerging market currencies. But what I think is going to be really important is if you break above 2022, and the reason why 2022 is a big deal. Let me just focus in here on a little bit. Here's your date.
The bigger the base, the bigger the launch into space.
Dale, you are so good. I love it. All right, so here, this is the 618 retracement of the August highs to the lows right here in September. That's the 618 retracement. We stopped just shy of there last week. So a move above 2022, and then we got some risk off coming. I think this dollar max is like one that you should be really, really focused on. And if you're long risk, like if you're long, like let's say you own Aussie yen or you own Aussie dollar. In my opinion, the dollar Mexican peso is the best currency hedge you can put on right now. Long dollar max. So anyway, that's just some food for thought. So Stelios, Ryan, Steve, any other things that you want to discuss for the last couple minutes before Dale has his interview this morning?
One more thing I wanted to mention is we got some data today. So it was pretty heavy, with central banks and data, and we got a large number of PMIs from Europe and the UK, and they were all red. So we're expecting PMI, so manufacturing and services PMI in Germany, for example, in the 60s, they came in like 3-4 points lower. Same in the UK. So, numbers are, is it just one piece of bad data? Maybe, but, overall, the numbers are starting to turn. We also got Spanish GDP expected 2.8% quarter on quarter, came in at 1.1. So overall data is not looking too rosy. And imagine if central banks start hiking into this. That's what I'm going to say.
Very good. And I'm sorry, Martin mentioned really quick. You said dollar Mexican peso carry costs are high. They are, but your carry cost over the weekend or overnight, if you're not hedged, holding long like an Aussie yen or something, could be way bigger. Should there be some headline risk? That's what I say. It's like a hedge. If you need to hedge something, short term, that's a good hedge to take. Anyway, sorry, go ahead. Was it Steve that was just going to mention something?
Yeah, stimulus effects are running out still. Obviously.
Yeah.
With the PMIs.
We've been seeing in general a slow of the pace of the recovery, which was anyhow almost exclusively induced by excessive monetary policy stimulus and some fiscal policy on the back of monetary policy, because let's be very frank, monetary policy has nowadays become at a big extent a tool of monetization of government debt. So governments can also do their part with fiscal policy, but with debt that nobody actually buys but the central bank.
Yep.
Are you there?
All right. Very good. Ryan, any other final thoughts as we go into North American trade?
Just to add to Stelios's view on the PMIs and stuff, just a quick one. It's what I read in all the PMIs is that the dip in these numbers is not due to a lack of demand. It's due to a lack of being able to produce and fulfill that demand. So that's, it's going to equate into potentially economic weakness in the numbers, but it's not a fundamental weakness. So it falls into the stagflation narrative that I'm expecting next year.
Don't say that word. You can't say that word. Not in
hashtag
public.
It. Stagflation 2022. Hashtag.
Cut that out, editor. Everyone, I want to say thank you so much for being here. Everyone, meaning you guys, the team. And then I also want to thank all the listeners that are in here today and stick with us every day through these not so volatile times, but volatility is really picking up. So it's going to be a much pleasurable experience in the markets, I feel, going through the remainder of 2021. So thank you all for hanging out with us. Make sure you visit our webinar sponsors, Forest Park FX or Pepperstone Securities, but Forest Park is probably the one that they'll just help you find a really good broker. We've been partnered with them for many years, for about 5 years, so they are the concierge of brokers for you. So make sure you contact them. And Dale, have a great interview. Everybody, thank you so much for joining us, and stick around because this should be a good interview with Dale.
Okay, good hunting, team. Go bring
Thank you,
home
Dale.
dinner.
Cheers, guys.
Go bring home dinner. Steve, Stel, Ryan, Blake. All right, guys, go hunt. And Ryan, welcome back to F.A.C.E. It's been a long time.
Hey Dale, can you hear me?
Yeah, I got you, Ryan. Loud and
Hey,
clear.
how's it going?
Good. How are you, my trading warrior?
I'm
brother?
good. I gotta be honest with you. I was just outside having coffee on my deck, and for some reason I thought the podcast was a little bit later, so I got your message thankfully and ran
Oh,
inside.
cool.
I'm
Cool.
good.
Where do you trade from, Ryan?
I'm in New York.
Okay. You want to share your screen? You have something to share with us that you
Yeah,
want to
hold on
talk
one
about?
sec. I haven't been on Zoom in a while, so
Yeah, it's that little green box.
let me just how do I pick a
A nice fall morning in New
motion
York.
screen? All right,
There you go. It's coming up.
one sec.
All right.
Can you see
Yeah.
the trading view screen
Got
in
it.
its entirety?
Well, yeah, Bitcoin, perpetual
Cool.
contract.
All right.
All right. So you've been much more active in crypto since we
Yeah,
last
absolutely.
talked?
Yeah, I mean the summer months are lighter. We see summer months kind of pull off. September is not really a good month for crypto historically, even though historically we're only talking about just over a decade. So it's really hard to go by what's happened when you have such a small sample size. But
That's not ghost month, is it? September?
What's that?
There's a month that crypto traders call the Asians. They have a month called Ghost Month, ghosts like Ghostbusters,
Oh,
where they're not supposed to be investing. I've had some crypto guys tell me that's usually, not as much money flow since Asia is a big part of it, or used to be a bigger part of it.
huh. No, I'm not. That might be during the Chinese New Year. I'm not really familiar. I know that I know September is just historically it's a poor month from a return standpoint for Bitcoin. But obviously rolling in right now to the end of September, the only thing that I would say is obviously worth considering right now in the bigger picture is not the only thing, but one of the more important things is obviously what's taking place in equities, what's taking place in traditional markets.
Yeah.
A lot of crypto native traders like to think that Bitcoin is and crypto as being part of that is something that's independent of traditional and legacy markets. But what we've seen in the last year is that relationship has strengthened. And so what happens is obviously the smaller cap cryptos are like higher beta plays on Bitcoin. And when we have something like the VIX rise or something like the S&P or the ES, which we'll look at in a sec if we want, when that is experiencing significant volatility and we see a rise in the VIX, it spills over into crypto and then inadvertently starts
So it's
affecting.
a source of funds when there's risk off and people need liquidity.
Well, yeah, that especially during any kind of liquidity crisis, you'll see contagion, obviously, like you'll see in all markets. So the Evergrande situation is something that is obviously or should be on everyone's radar. I don't really think that it's going to be as significant I don't think what will end up occurring. I think we've seen the bulk of it. I'm not really expecting much more, but then again, it's not really my area of competence. I really just source most of this stuff from guys that are better in this particular arena.
What about the cockroach theory?
What's that?
Ryan, that if you see one cockroach, there's normally more than one around.
Yeah,
What do you think?
I don't want to get too far into conjecture because
right.
then it would be very difficult for me to just take a position period if I'm just going to be assuming that we're waiting for the other shoe to drop.
Yeah.
As long as
you don't want the sword of Damocles hanging over your head.
what's that?
You don't like the sword of Damocles hanging over your head?
No, I mean, I am,
Then stop trading.
yeah. Well, as it is right now, I largely risked off when Bitcoin initially broke down from its highs. So I became more focused on my short-term trading than any kind of long-term exposure. There are a lot of people that really buy into the narrative and romanticize, these pairs, but Bitcoin has more of a macro relationship right now, and I treat it like anything else. It's just an asset. I'm trading it. So right now we've had a pullback from that previous all-time high. I don't get the impression that it's done, but I do think that we're going to be due for a longer period of consolidation. We have in this case, it was more than a year. So from 2020, so from March 2020, Bitcoin has essentially been on a, one-way path upward. We have, 3-month consolidation at the highs, no major blow off top. But regardless of whether or not we were going to continue up or continue down, you would expect that you would get some type of pullback back to that, at least back to the 0.5 fib or back to the 618 after such a significant move. So, us being here, a lot of people end up longing this structure when the reality is it's kind of the most important contextual level on the chart that we would expect to act as resistance. So for me, I am in a position right now where I need to see that, this sort of 39K to 40K level access support, right? Because it was sort of a month and a half long. It was that very significant contextual point of resistance for this consolidation post breakdown. So I would expect this to act as support, but I would like to see it develop a little bit further before I really start getting heavily back into spot positions. Most of my futures trading is on the shorter time frame, so more intraday. I'm talking about long-term exposure. That or a reclaim of the 45K region, which right now is currently acting as high time frame resistance. I think that what ultimately is going to happen with BTC is it's going to, into the month of October, it probably will range a bit more. We are still in a higher time frame range, and then potentially, maybe begin its trend again going into 2022. I don't think that we're looking at an all-time high the end of this year. So that's just the high time frame.
Yep.
So 50K is probably, that round number level right now, considering we've had the rejection sit there so far. If we're able to reclaim 50K, that's fine. I'll get heavier into it. If we develop some sort of base down here around 40, then I'll consider getting into a larger spot position or getting more exposure. For now, I'm really just focused on the lower time frames.
Is there any chance for full-blown retest if things say get ugly? With risk off?
I don't think so.
You don't think so?
No, I
we
mean,
couldn't see 30 again.
Oh, okay. So I'm sorry. When you said retest, I was thinking you meant all-time high.
No, I'm talking about if there's a 20% correction in equities. Could Bitcoin see?
If there is a correction in equities, I think that Bitcoin just behaves like a higher beta equity.
Okay.
It trades like a tech stock at that point, which means that obviously it's going to have more downside. This 40K level is doing its job so far, but a lot of the times Bitcoin has the tendency to revisit all possible points where you would find most of the liquidity. And in this case, sort of this 37K low is attractive. And you see obviously a lot of stops placed around there. That's sort of the low pre this large move back up towards this all-time high consolidation structure. But if we see a further correction in equities, then the way I play it is if we reaccept back within a prior range, so underneath 39, and we're talking all the way back down to low 30s, I just treat it like it's going to fall back into the same comfortable behavior it was prior. So It becomes very deterministic in that sense, because it is very technically driven, that if you lose 39, regardless of the circumstances that cause that it's very likely that you quickly revisit sort of that 35, midpoint of the range structure for this lower consolidation. And then, depending on how we get a response there, maybe we look for a play back towards the range high, the prior range high, or look towards the lows again. There's nothing that's, out of the question when it comes to where this can.
Everything and anything can happen.
Yeah, I mean,
Yeah,
and
right.
a lot of it, I think that a lot of it does, as far as the high time frame, I think a lot of
Yeah.
it does hinge on, what equities do into fourth quarter.
So you're swing trading on what TF, like a 4-hour, right?
Yeah, so if I'm most of my trading, I'd say 90% of my trading is lower time frame position trading, focusing on things like the current financing costs in crypto. So for the derivatives, we have funding, which is something that is popular if you're trading the perpetual swaps or the leverage products. And the funding is going to be an indication of whether or not longs are currently paying shorts or shorts are currently paying longs for those positions. For my swing trading, I'll be focusing on mostly higher time frame structure. So the 4-hour to the daily, the major contextual levels that stand out. So, we're talking major pivot points on the daily, on the weekly. But the lower time frame trading, I'm focusing mostly on order flow and market profile. So this, the region that we're in right now, we've had a significant response off of that 40K level. But I wouldn't really expect us to V-shape reversal right here. It's not like we've had any kind of significant buildup in open interest. If anything, we've seen open interest drop. So I don't think we're really looking at much more of a squeeze than we currently have. So what ultimately I would want to see if I was still long, in this case I'm not, is that spot was leading the market. And I think there is a slight spot lead right now. So spot is actually trading slightly above the futures market, but I think that we ultimately are going to be basing out over the coming days. So where we're at right now, I would expect us probably to develop back beneath 43 down to 41. It's just typically after Bitcoin has a significant move down, it's not going to just V-shape reversal under, not under these types of conditions. So we would probably be looking at maybe a 3-4 day consolidation. So ultimately for me, what that would mean is if we lose this low right around 43, so 43.3, that we'd be looking to fall back within, what was the prior value areas of the last 2 days, which is between 43.3 and down to right around 41.5.
So when you're sitting here flat, Ryan, do you have a bias? Are you prepped so that these areas that you're talking about, should they come into play, that you're ready to execute based upon, that's why you're when you're, really we get paid at times when we're flat and we're doing our work to come up with the plan so that when the market's there, we're not involved in analysis, we're executing. So
yeah, no,
go ahead.
No, sorry. So yeah, so my routine in my house is wake up. I already know most of the significant levels on the chart. I have
in your head
the areas that I want to be at least present so that I could determine whether or not I want to get active. Most of it is sitting in the last couple of weeks. Most of it is honestly sitting on the sidelines.
Right.
With Bitcoin, since it is so technically driven, the setups such as before this breakdown. So for example, the return back to this higher time frame level, so 39, 40, this swipe of these lows down here around 42, 43. These levels are really high probability areas that you would expect a response. And it's almost like if you just got involved at the higher time frame levels, even if it meant on the low time frame. So the first visit back to those levels, if you only got involved during those periods and you stayed out of the market every other time, you probably could get away with doing really well. But most people obviously, they have trouble sort of being inactive, right? Sitting on the sidelines, just kind of observing, stalking, hunting, whatever you want to call it.
Tom Petty
so
wrote
I already
about it.
know the levels I want to get involved. Those high probability levels immediately are in the forefront of my head. Once we start interacting with them too much though, it's probably going to be that they're going to be less significant in getting that, very obvious response that they would on the first trip back. And then
so you become jaded if an area, if the market's giving people too much time and opportunity to trade at a critical price level. It's saying, okay, you know, you missed it last week, the entry at that support level, but we're going to let you buy it here again.
Yeah, that's usually not a good sign, right? The way that I look at the market is, we talk about, for example, the TPO chart or market profile is the same way that you should if you were looking at, something that you're going to buy in the store, right? If you're looking at, if you iPhones, for example, the new iPhone 13 came out, it's probably like $1,000, right? If you dropped the price of that, by 20%, it shouldn't, if you had 100 of them and you drop the price by 20%, they shouldn't be for sale for a long period of time, right? You would expect that those would be immediately grabbed by people looking to buy. Same thing with the market, right? I mean, if Bitcoin is trading at lower prices and sort of hovering around a previous level that gave it a significant response prior, and this time around it's kind of just moseying there, then I'm not seeing the sort of response that would say to me, hey, buyers really want to get involved at this level because they're letting it hang out here for, a considerable amount of time.
Have you let go of trading the legacy markets, Ryan?
Yeah, for the most part, it's just something that I'm using as proxy now, as more of a, again, if I'm looking at the S&P or if I'm looking at macro or if I'm paying attention to the VIX when I mention these things, it's kind of just to make sure that things are steady enough for me to be, one way or the other in crypto, right? If we're seeing,
interesting.
When
did you make that decision? Because last time, I think this is like a new paradigm for you, isn't it?
No, I mean, I think the last time we spoke was like 2 or 3 years ago, maybe, right?
Wow. Yeah.
So I have completely transitioned to trading primarily crypto. It's
okay. Well,
it's a lot. The way to put it is, it's just an easier poker table to play at.
I like it.
Yeah.
Okay. All right.
So
do you trade with hard stops?
on the low time frames, I'm not really using stops. On the high time frames, yeah, I'm trading with a very hard invalidation level. Low time frames, for the most part, when I'm trading, might have a tail risk stop on, so something that is kind of just outside of the area where I'm getting involved in case market sort of rolls over. But a lot of the times on the low time frame, I'm going to be manually pulling myself out of trades immediately when they're not sort of showing the response that I want to see. That's for the low time frames, though. I don't advise that people don't use stops. That's something that you have to obviously have an invalidation for your trade or something that really says that, hey, my thesis is incorrect. For the high time frame, a lot of the times my stop is going to be based on either a multiple of the daily range. So what you'll see is some indicators are helpful in this regard. They'll actually incorporate some type of line on the chart to help you determine that. So a multiple of volatility. So if I'm following a trend, it would be similar to using a moving average as a stop. So either a multiple of ATR, a moving average for a trend, and obviously if it's a matter of market structure, if we lose any significant level of market structure, then yeah, I'm for the most part, I'm going to be out of that position.
All right, where would be the safest place to trade crypto? Regulated so that you're pretty much assured that your deposits are safe.
So, me being where I'm from, the safest regulated place that's really only available is for most retail is Coinbase.
Okay.
And
do you feel
Coinbase,
comfortable leaving a lot of cash in your account there?
I am. Yeah, I am.
Interesting.
I don't, I self-custody the spot positions that I end up picking up, meaning if I'm buying a long-term position and not using futures to get exposure, then I'll probably just put that in my hardware wallet. It is completely different from sort of what if you're coming from a legacy background and you're trading legacy, the concept of, for example, you wouldn't take custody of your stock certificates, right? If you're longing Tesla, It's not like you're holding Tesla in your closet. Whereas with Bitcoin, you have the opportunity to buy Bitcoin, take it off the exchange, put it on, or rather it's not taking it off the exchange, but taking control of your private keys and putting it on some sort of hardware wallet. But that gets more into sort of the philosophical differences between crypto and legacy and taking control of your assets and self-sovereignty. And, that's not something that I am here for really. I appreciate that. I think that, there's something to be said for that in this day and age, but I'm primarily just here to take advantage of the volatility.
Okay, and did you do you have any comment on Jay Powell was asked about the U.S. government going to some type of digital asset, crypto? I found it interesting that they're doing studies on it. You think that governments allowed this experiment to occur so that people would embrace it and they could have their own deal?
So it's an interesting thesis. I mean, I think that it's an inevitability. I think that they definitely see that there's a lot of interest in it, but I don't necessarily think that they take into account that the people that are interested in the crypto version, the more crypto native version, obviously, Bitcoin, for example, are in it for sort of different motivations, right? To sort of get out of the current financial system, whereas
to get out of fiat.
Right.
Yeah.
Ultimately, I don't think the game. So I'm not like I don't really drink the Kool-Aid too much with that, because I know that when it comes to government, it's a matter of who has more guns in that case. You're not going to start a new, I don't think you're going to start a new world currency under the sort of purview or eyes of the United States government, right? So
Okay.
I think you have to embrace regulation. I think you have to accept that when they get involved, they're going to shake things up. Ultimately, I think it's better for any kind of long-term promise for the asset class to be regulated so that it's accepted, so that more people are willing to get involved. When you talk about pension funds, old money asset managers, it's not like they don't want to sort of dip their toes in until they know that it's safe. So for things like an ETF, for example, it comes up a lot. I don't think you see an ETF until they've kind of cleaned up the space to their liking. And I think, part of that future means that, there's going to be sort of the, what's the central bank digital currency, the Fed dollar, whatever you want to call it.
Yeah.
I think that that's just the reality now, right? There's no way in sort of arguing against it.
Okay. Well, it's anything you want to wrap with here, Ryan? Interesting to talk to you. I know you really don't have an axe to grind. Are you managing money or just trading your own account?
No, I'm just trading my own account. So
okay.
Don't have an axe to grind. I wish, I honestly, I didn't realize that I made a mistake with the time. I ran to the computer. I was probably not as prepared as I should be. It's my mistake. But just to wrap it up for BTC right now, I trade some of the altcoins when Bitcoin is in, I would say, a more stable environment. For Bitcoin,
like
I would like
Pink
to
Sheet
see
stocks, aren't they?
What's that?
They're like Pink Sheets used to be.
Yeah,
right?
They are. They trade like penny stocks, like OTC stocks.
Okay.
But for Bitcoin, what I would like to see is I'd like to see either a retest of the low 40 region, because I think we're ultimately going to balance out between this 43, 41 spot. Or if we're able to reclaim 45, I think that would probably be 45 up to 48 would be a pretty quick trip. Right now, where we are, it looks like we're consolidating at higher time frame resistance, but sort of rolling off of it, not consolidating in the way that I would want to see for me to think that it's going to suddenly start breaking through.
Yeah, it's going lower.
Yeah, so I think that this is a bounce on the way down after a very significant drop.
Yeah.
But even after the FOMC meeting yesterday, you saw traditional markets had this sort of response where it's like, okay, this is they're interpreting this as somewhat hawkish. So
yeah,
I don't think that bodes well for Bitcoin.
Okay. Well, I appreciate you taking time and being flexible, and you didn't miss a beat. So you were prepared. It was nice talking to you again, Ryan.
Thank you,
I
Dale.
hope you have a great fall trading season, and that you stay healthy. And do you want people to follow you on Twitter?
Sure. If they want to follow me, I'm Cantor and Clark on Twitter.
You ever take anyone under your wing and teach them?
So a long time ago, we created a course on market profile and order flow. And if they want to check out that course, it's at www.blockroots.com.
Okay. All right. You know, you really have to have a lot of patience to teach, don't you?
Well, that's why I created the course so that I don't need to
That's
underhand.
why that's why I said that.
Yeah.
All right. Well, Ryan, great to talk to you again, my trading morning.
Likewise,
brother.
Dale.
All right, buddy.
Take care.
All right, good stuff. So that's a wrap, everyone. We'll tomorrow we'll wrap it up with I believe the owner of Live Squawk. So hope you guys enjoyed Ryan. You could tell that this guy knows market, so he's not trying to sell you anything, but perhaps follow him on your curated Twitter list. And good hunting the rest of the day, everyone. That's Friday, Richard. I think Ryan's going to help me with the interview there. See you, Hugo. Adios, everyone. Remember, don't just block roots. Okay. I thought you were talking about my hair, Barry. So don't just count your pips, count your blessings. See you, Sinatra. See you, everyone.